I won't stop till I hear him say,
You're in a big financial game. And if you don't understand that you're in a financial game, you're going to lose the game.
Okay, what is going on, CYPRX advanced students? Welcome back to the CYPRX YouTube video page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, and foreign exchange, please go ahead and consider subscribing to the YouTube channel. Guys and gals, I want to first apologize that my light is not on. My camera's a little blurry because the light's not on. It's early here in the morning and I don't feel like having a massive projector light on my face right now. So I do apologize for that. In today's video breakdown, I'm going to be showing you guys some video snippets on why it is that I took up trading roughly around 7 years ago. It'll be 7 years coming up in this October. Just showing you guys a couple of video snippets, waking people up, showing you guys that these central banks, right, they're not your friends, and people need to wake up as to what it is that they are doing. They are printing money at a rapid pace, and it is, at the end of the day, it's not benefiting any of you, okay? If you're watching this at home, and I've been saying this for quite some time, people want to call me crazy. They don't want to listen to me, but the people that are really waking up to this information. If you have money saved in a bank and you think that you're balling or that you're doing good with your life, you have good money saved, I get it, right? That's what we all want. But at the end of the day, it's not doing anything for you and your financial future. If you have money saved in a bank, right, let's just say hypothetically speaking, it's $1,000. Well, by the end of the year, that money is actually going to be decreased in value. And it's still only going to be that $1,000 of fiat cash that you had put into the bank account at the beginning of the year. But the value of it is going to be less, which is why almost 7 years ago, I took on learning how to trade. I took on learning how to get out of the system, right? The feds can print money. The ECB can print money, right? The European Central Bank, the Bank of Japan can print money, right? The Bank of England can print money. The Bank of Australia can print money. The Bank of Canada can print money. Why can't you? Why can't you make money out of thin air? That's the question you need to ask yourself. So if you're watching this YouTube channel, smash that thumbs up button. I have some video snippets that I want to play for you guys from some very influential people. Again, I'm just an individual on the YouTube space attempting to wake people up. So in today's video breakdown, I'm going to attempt to do that. I'm then also going to go into a Gbpjpy trade, my MetaTrader 4 entries, and show you my analysis on TradingView. So without further ado, let's jump over, do a little screen share, and let's jump into today's video breakdown. So first, I have a couple of video snippets that I want to play for you guys. Just sit back, relax, and listen. And again, these are very influential people. You guys can go check these individuals out. We have Greg Menarino. I hope that I'm pronouncing his name right. And then we also have E.B. Tucker. Okay, so go ahead and take a listen to these individuals and hear some of the things that they have to say. Again, I'm a guy trying to wake people up and influence people to change their lives financially, helping them out, motivating them, teaching them how to read these charts properly by executing logical trades in the market. But these individuals are millionaires, billionaires, very influential people. So listen to what they have to say. After we play some video snippets, I will dive into the technical analysis breakdown on Gbpjpy, show you guys how I scalped the market this morning on my leveraged CYPRX account.
What are they trying to do? They're selling people an epic lie. I think it's the biggest lie or deceptive management policy regarding inflation in the history of the freaking world here. They're trying to convince people, it's insane to me. They're trying to convince people that by nudging the federal funds rate, incrementally, oh, it's really going to help inflation. We're going to be fantastic. It's going to be great for everybody. How about no? All this is doing is guaranteeing inflation is continue to surge higher. They know it, and I think anyone with a functioning brain cell, just one, realizes that's the same story here. But it's not going to change here. The current environment is so twisted and so upside down, it's very difficult to make heads or tails of what's going on. But what we do realize, I think we should all know, is central banks are not done. They're going to continue to inflate. They're going out of their way to create more inflation. They're strangling to death an entire class of people. Have been pushing this narrative now for I don't know how many years, and it's in our face. It's going on right now. It's going to get worse, and people need to prepare for a worst case scenario. Right now, it's going to get worse, and people need to prepare for a worst case scenario. The global economy is in free fall, and the action of central banks proves it. Look at what they're doing. The European
or anything about inflation. Like, I hate to tell you something. No one cares about inflation and about helping you. No one's here to help you. There's going to be no help, okay? All they're going to do is distract you. What the Fed wants to do is strengthen the dollar. So all these countries, when the Russia situation goes on, they were walking away from the dollar. You see Saudi and China, they're all trading oil and what? Okay, so the Fed says, uh-oh, if this happens, the whole Western system collapses. So we got to strengthen the dollar. So how do you strengthen the dollar? You create a dollar shortage. That's what's happening right now. The dollar's getting stronger against every other currency.
It's up 10.4%. How many people are paying just 10.4% more for their food? I think it's more like, it's over 50, maybe in some cases 100% more.
Absolutely.
So it's just more the deception, more the distraction, but this just is so simple to understand. The goal here of central banks is to foster in a new system, period, the end. And how they're doing this is, the goal here of central banks is to foster in a new system, period, the end. And how they're doing this is by strangling people to death via surging inflation. That's where they're going. They continue to go out of their way to create more of it. And you know, what's going to happen? At one point, people are going to say, I've had enough. What did we also find out recently? 75% of middle income, by their own data, 75% of middle income earners here in the United States, they can't make it anymore. And you know, you got to stop. Enjoying their last hurrah, and until they go down into that lower rung of society and become slaves to the system. That's what it is. Yeah, sure. Yield curve is inverted. It's extremely inverted at this point here, but that doesn't tell me, or I don't think anyone that follows my work or who understands what's happening, anything. We realize that the economy globally is over. It's in free fall. It's not going to stop. And every mechanism you can dream about and things you can't.
Does the new monetary system you speak of include a digital dollar?
Oh, absolutely. I mean, that's the ultimate thing. What they're going to do eventually is go to a completely digital system where every single transaction is going to be tracked down to the 10,000th of a cent here. So look, the new system is very simple to understand. You can see it unfolding now. They're going to go after people's freedoms and liberties more so. They're going to exert a lot more control on people. And I think their end game here is they're going to go after people's freedoms and liberties more so. They're going to exert a lot more control on people. And I think their end game here is to, this may sound extreme, but to reduce the population of the world by a large margin here.
So the dollar is like walking around with a baseball bat, okay? And what they do with this baseball bat is they club people that don't go along with the plan, okay? So
they want to give the illusion that, hey, inflation is our number one focus, but it's really not. Strengthening the dollar is really numero uno, but they don't necessarily want you to know that they're doing this.
They actually need to have inflation because if inflation is 10% and the federal funds rate is less than 1%, that means that if you have money saved up, you're losing 9% per year. That means all the things that you buy are going up in price by 10%, and the money that you have saved is only earning just less than 1%. We're in a big financial game. And if you don't understand that you're in a financial game, you're going to lose the game.
Alrighty, so I hope that you guys enjoyed those video breakdowns. Let's dive into the charts real fast. Again, if you guys like this content, smash that thumbs up button. This is a weekend video, so I hope that you guys enjoy your weekend. This was a very beautiful CYPRX Confluence risk to reward ratio trade on Gbpjpy. For those of you guys, again, who are here for crypto, you watch my page because you're an XRP holder or whatever the case may be. If you pay attention to what those videos said, the ones that I just played for you guys, okay? You have the ability, and the market makers, the school systems, the government entities, the jobs, the colleges, they won't tell you that you have access to the money that these individuals are printing on a day-to-day basis, which is why I took up trading forex, which is why I took up trading crypto. Okay. So with that being said, just to give you a little perspective, right? Again, not financial advice, but remember I said at the beginning of this video, you have $1,000 into a bank account at the beginning of the year. And by the end of the year, it's going to be devalued. It's not going to be that same $1,000, and it's just going to be sitting collecting dust in your bank account. Whereas think about this, if you learn how to trade, and you can even just learn a strategy that teaches you how to make 1% in a week or 1% in a month, well, guess what? There's 12 months in a year. And if you're making 1% per month on a forex account, let's just say you uploaded an account with $1,000, you're making 1% per month. That's 12% per year. That's 12 times more than what a banking institution will give you. Do you guys understand what math I just told you? Okay. Now that's on a minuscule scale, that's on a small scale, micro scale, compared to what you can really tap into in these Forex markets. And I learned that 7 years ago and devoted my life to doing this. Now it is not easy. It's not something that you can just do overnight. It took me 3.5 years to become fully profitable. Again, it took me 3.5 years to become fully profitable. Now that's not to say that that's how long your journey is going to take. We have students in our CYPRX community that started 6 months ago and they're already placing nice, beautiful, profitable trades. We have students like Christian, right, who I'm going to do an interview with on YouTube for you guys, so that way you can see who I met in Mexico, who is fully funded $30,000, and that only took him 6 months to be a part of the CYPRX community. We have Justin, who I'm going to do an interview on, who's almost this close to passing his phase 2 of a prop firm challenge and becoming fully funded with $100,000. For example, he's been in this community for 4 months. So everybody's journey is different, and that's what you guys have to understand. But that's not the important part. The important part is that you start the journey. Okay, you start the journey, you start doing this information, you start alleviating yourself from the system, from the chains that have been installed on you your entire life. Okay, if what I'm saying to you is touching home and you're vibing with this information, again, smash that thumbs up button. Let's wake more people up. Even if you don't join the CYPRX mentorship, I get it, right? Some people don't want to pay for their education, but you still, again, you know, should be listening to the information that I'm providing with you and then doing a deeper research on it yourself. Okay, don't just take my word for it. Really go into detail and figure out, you guys, that the system has you locked in. Okay, it was programmed to work against you, not with you like everybody thinks it was. I'm done the spiel. Let's jump into today's video breakdown. So I was able to capitalize on a beautiful, this trade still floating. Here is my MetaTrader 4 entry. It was actually, let me fix this, at 162.095 if I'm not mistaken. Give me 1 second. Okay, boom. So there was my MetaTrader 4 entry. I'm going to fully break down this trade, do a little quick educational video on the price action during today's New York session. So you guys know I'm a New York session trader. We had FOMC come out, you know, again, we know time and logic in the market. The FOMC came out at 5:30 a.m. So I'm going to go into detail on avoiding trading that specific time and then how I was able to react to the pullback. So on the higher time frame, okay, just to kind of go into the higher time frame analysis, charts on the left-hand side, i.e. trading with the left brain, right brain scenario. Okay, again, that's something that I give to the CYPRX students on how to do in detail, utilizing the higher time frame, so that way we make sure that we're trading with the trend, with the banking institutions. We know that the banking institutional traders trade on the higher time frame. So what do we want to do as scalpers, as intraday traders? We want to correlate our fractal analysis with what the higher time frame is telling us, right? So with that being said, we can see over here, I'll just open up these higher time frame charts, i.e. because we're scalpers, we're intraday traders. The higher time frame for us is the hourly, 30-minute, 15-minute, 10-minute, in my personal opinion. That's what I like to correlate as the higher time frame. Okay, but we can clearly see that the market makers are grabbing lows and making new highs. All right, we can see that that happened during Asia session, or we can see prior to the Asia session, we see lows that were created in the form of pre-engineered liquidity. They ran those lows and then they made new structure highs during their session. Same thing, London session, they did what? They pre-engineered liquidity in the market, i.e. internal liquidity, which I've gone over on this YouTube page multiple times. They grab that liquidity and then they take buy positions from discount, where banking institutions from Asia bought from, right? So we can see a common theme here where the banking institutions are piggybacking off of each other's previous buy areas. So logically speaking, we now have two well-defined areas that we would need to break before we can confirm any type of bearish sentiment. Why? Because this is a new day's worth of trading, okay? This is where the new daily candlestick low or candlestick would open, and this is where the new daily candlestick low would form. So until this low is broken, we are in a bullish environment, right? Why? Because the previous day session made a new high. We see the same reoccurring theme where London session liquidated lows and took buys. Once London passed price action over to New York, we see that trend continue. But now I want you guys to pay attention to detail. Now we have structure coming into this New York session. Let's pay attention to the structure. Again, this is the 10-minute chart. We can see the same pattern that I teach you guys to identify on the lower time frame. We see a low here, We see these two wicks, wick beneath that low. Then the market structure makes a higher low after the grab of liquidity and makes a higher high. So now we have a well-defined higher low, higher high formation. Then that trend continues. The market pulls back. We roll into New York session. And again, we would have had all of this price action information coming into this New York session. So for the people that say hindsight testing is garbage, guys and gals, no, it's not. Do not listen to them. Okay. Do not listen to them. The market pulls back, creates a higher low. Again, now I'm going to get into the fractal nature of things. Remember, as scalpers, we're looking for the what? The sweep of liquidity, the reaction from that sweep of liquidity. We're looking to identify the higher low after that sweep of liquidity that leads to a market break in structure. Once this pattern right here happens, guys and gals, this gives us the green light to draw our Fibonacci. Once this bullish leg starts to retrace at least 25%, right? That gives us the green light to take our fib from the higher low after the sweep of liquidity from the pullback to identify that the market makers are most likely going to continue to add to their overall position, because we know that they can't just push price up. So if they're bullish, they have to take multiple orders. And we're seeking to get in on a retracement of anywhere between 70 to 79% discount to give ourselves the best risk to reward for the market to continue suit. Okay, you guys see how this works, right? Well, let's jump into the fractal nature of things. So now that we have a new well-defined pullback, again, sweep of liquidity. I'll jump into this on the lower time frame. Here's the higher low after the sweep of liquidity that leads to a new A to B move that breaks previous market structure. So we are still trending up. Let me show you guys again so that way you're not lost on the lower time frame how this all correlates, okay? Now I'm going to show you guys how this all correlates. We're going to put some 10-minute markers and correlate this with the 1-minute chart, and then we're going to expand the 1-minute chart so I can show you guys how the higher time frame correlates with the lower time frame. So let me just clear some of these red drawings off for you. All right, and on the 10-minute chart, we're going to pay attention to the higher low that led to the market break in structure on the 10-minute chart. So we're going to take our drawing tool, our horizontal line, we're going to draw it on the candlestick bodies, and then we're going to clone this over to the 1-minute chart. So I hit sync layout and watch how this correlates. Okay. You see how this black line, again, which was drawn on the 10-minute chart, correlates with the fractal price action. Again, fractal price action is the same thing as the higher time frame price action. It's just multiple candlesticks. Okay. These 10-minute candlesticks, right, on the 1-minute candlestick turn into 10 candlesticks each. One 10-minute candlestick is 10 1-minute candlesticks. Okay, you guys see how that correlates. So now what we're also going to do is we're going to delete this black line. We're going to take this black line and put it on the candlestick body highs. Okay, so that way you can see how this correlates with the lower time frame. Sync to layout, and you can see how this black line again correlates with the higher time frame. So now we have a new A, again, higher low after the sweep of liquidity, to B move that broke a previous market structure high. This is the pattern that I teach you guys. Now all we have to do is wait for a pullback to get in to an additional move, knowing that the banking institutions are not going to just take one buy position. They're going to add to their overall order. So now let's jump into the lower time frame. Now that we have these well-defined areas, I want you guys to really truly see how this all plays out. Okay, so check this out. We have our well-defined area of interest, right? Now let's jump into the fractal nature of things on the lower time frame so I can show you guys how this all correlates. Again, remember these black lines are the A to B move on the higher time frame. But now on the lower time frame, we're going to utilize the same methodologies, locating the what? The higher low after the sweep of liquidity. So if these are the 10-minute black lines, we can see here, this is a low that gets violated. On the fractal nature of things, this is the low that sweeps that liquidity. So where's the higher low after the sweep of liquidity, guys and gals? Again, this is how you get those well-defined sniper entries. Here's the higher low after the sweep of liquidity. So on the lower time frame, this is going to be our area of interest to take our Fibonacci from for the banking institutions to come back and add to their order. Remember, this first order was a manipulation move to sweep liquidity. This second order was their powerful addition to the sweep of liquidity that drove the price of GBPJPY higher, right? So we're looking to add to this order, not to their manipulation order. You guys get what I'm saying? You catch my drift so far? Okay, so now once the market pulled back, again, we take our Fibonacci. Let's get rid of these red lines so you guys have some clarity. Okay, higher low after the sweep of liquidity. We're taking our Fibonacci. Okay, again, remember the Fibonacci tool is a tool that is utilized to determine institutionalized discount. Okay, Institutionalized discount, where institutions are most likely going to buy from discount or sell at a premium. So from the low, again, the higher low after the sweep of liquidity to the high, once the market starts to retrace at least 25%, we extend that over and we wait patiently and sit on our hands. Now let's go into the manipulation in the entry, okay? We can see again the same pattern, guys and gals. Every single time that the market is about to make a significant move, this pattern will play out to the up or downside. We see a low that was preset into the market. We see the market sweep that low and match with bullish momentum. So now this bearish move that took place right here, okay, is matched with bullish momentum. Logically speaking, again, guys and gals, let's talk about logic. We know that if the market is going to continue down, it has to make a new what? A new low. It fails to do that. It fails to create the definition of a downtrend. Lower low, lower high, lower low, lower high, or bearish order flow. So with that being said, we have to identify that the market is not done trending based off of logic, based off the fact that we know the banking institutions are going to do what? They're going to manipulate price lower to take discounted buy positions. And they did that right here. They told us they did that with this pattern right here that I've explained to you guys multiple times. Then we see them build internal and external liquidity. Okay, they're building liquidity above highs in the form of buy stops and over leveraged people who are trading resistance methodologies, and they're creating double bottoms in the form of equal lows and the people that trade support methodologies. Then what do we see right here, guys and gals? And this is where the CYPRX confluences come into play. We see them sweep lows. We enter into the market based off the ideology that this is a what? A double top formation. We trade against that. We know that the market makers already showed us a willingness to grab lows and match with bullish momentum. So now fractally, this is now a new A to B move. We already are operating inside of an A to B move. Guys and gals, check this out. 70% discount. Look at where the banking institutions tapped right into to add to their order. 70% discount. So what we were doing was we were seeking to scale into a position. As you can see from my entry, 162.093. I entered all right here in this area when this bearish candlestick came down, swept these lows, and a new bullish candlestick printed and engulfed the previous two bearish candlesticks. Okay, the market retested the psychological level, 162.100. I'll go ahead and I'll mark that off for you guys. And boom, we rallied back to the upside. This was an absolute beautiful risk to reward ratio trade. Again, trying and attempting to free myself from the system. I am not a seven-figure trader yet. Have I consistently made six figures in this market? Yes, which is a stepping stone that, again, is realistic for individuals that want to take it upon themselves to really free themselves from the system. It takes time. It is not an overnight venture. And the people that come into the CYPRX community know exactly that. How? Because we give them a helping hand on truly understanding how to approach these markets with a logical perspective and to gain an advantage on what these elites are doing. They are printing money. So why can't you make money out of thin air? Now, look at this trade. Okay, I pulled profit a little bit early because I'm the type of person that likes security in the market. So when I have profit, I like to take my money. It's also Friday, so the market's about to close, right? You guys should know that by now on YouTube. I like to pull my profit once market violates highs, because then we operate in an environment of uncertainty where we don't know if the market's going to continue higher or if it's going to reverse after grabbing liquidity, and it's going to grab that liquidity and start to reverse and trend back down, right? So I like that security in the market. But guys and gals, overall, this trade took me, okay? This trade took me, let's just say 35 minutes. I made about $600 on this trade. Again, okay? I want you guys to understand what I said at the beginning of this, this Zoom call, okay? Please listen to me. If you're not taking it upon yourself to battle with these elites who are robbing your pockets on a day-to-day basis, then I don't know how to save you. But if what I'm attempting to tell you guys through these video breakdowns is hitting home and it's starting to click with you, again, reach out to me. I'd love to schedule a Zoom call with you guys, maybe talk to you about enrolling in the CYPRX mentorship program, show you what we're really doing for people here at CYPRX. Blessings to you guys all. I hope that you guys enjoyed this video breakdown. Again, this is an eye-opening video. An eye-opening video to show you, again, how you can capitalize on what these elites are doing, what these bankers are doing, okay? Blessings to you guys all. If you guys enjoyed this video breakdown, smash that thumbs up button. Make sure that you're subscribed. Don't forget, 10,000 YouTube subs means that we're going to be giving away 100 XRP. As always, be cognizant, be aware, be safe. You guys have a good weekend, and I'll see you guys in the next video breakdown.
I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say, oh, oh.